Hey traders, Nick here, talking about Netflix. Somebody asked. I am putting my 2 cents in. Okay, so this is a daily chart. Let me see if this is 1 year-ish. Yep, this is 1 year. It bounced pretty hard, I remember, off of the Christmas crash and reestablished, fell into the clutches of a prior consolidation zone. So the point of control now is pretty well established somewhere around this zone. And where to now? So first, I usually look at the fundamentals. Fundamentally, I don't like the way they operate. I think they spend too much money, but I think Wall Street gives them the pass for as long as they're delivering on the growth. And the theory there is the growth is the global growth rather than the U.S. growth. And they spend, I couldn't believe the numbers. I read billions and billions to produce the shows every year, 18 billion, whatever. That's a lot of money. So now they're going to have Disney coming into to compete with them. I think they already have a whole bunch of competition. We have I get offers from many, Google and all of these other guys, individual channels. They want you to pay $5 here, $9 there. So there is room for a lot of them. This is still in its infancy, and they are the first mover advantage. So from that concept, they might have some leverage there. But I don't think it's an either or situation with them or Netflix, with them or Disney. I think every parent on the planet will be forced to buy a Disney subscription, but I think it's only $5 or $7, even if they make it $10, because all kids want it here and abroad, the U.S. and abroad. The good thing for Disney is that they already have the content and they produce content a lot cheaper, so they will be able to compete on margin, but they're already low, so I don't know if it's going to bring more bad news for Netflix. I think there's enough room for both of them to thrive. Now it needs to deliver profits and figure it out how to make it work without borrowing billions going forward. For now, the rates are cheap. Excuse me, I'm still getting over a cold. And they can borrow money, but at some point they won't be able to do that, so they have to figure it out. So I'm not a fan of their fundamentals financially, but I don't have a subscription, so I guess not everybody has one. All right, so that's the fundamentals. Technically is really what drives the stock here. So if I own the shares, I would have to put a stop right here if I'm a short-term owner. If I'm a long-term owner, meaning I'm in it for the long haul, I don't worry about these dips. But if I'm short-term trading, like if I enter today on today's dip, I would stop myself out at 332.5. Definitely below. Sorry, the markets are open. 319, let's call it 320. So it all depends on personal preference. Now, I'm not saying that this is going to come back. This was, the sentiment, overall sentiment of the market was terrible. We had fears of China, fears of the Fed, until the Fed flipped. So this time it's different. We don't have the Fed as an enemy. In fact, the Fed is a put below, meaning they help the stocks. And next week we will find out if they're going to raise rates. I doubt it. Cut rates. I doubt it. Maybe by August, but not maybe July. But August is probably more likely. All right. So the Netflix range currently is tight on the daily. So I've got a problem. I'm a line hoarder. I'm going to put them back in because it speaks to my expectations. All right. So this is a daily chart. It had an inverse head and shoulder opportunity, which it didn't fill several times. So the neckline is not a hard line in the sand. It's more like a zone. It's still stuck in that zone. It's sticky. That's why it's a point of control, because the volume profile tells me that the bulls and bears are willing to fight it out hard. Let me go to a weekly and see if I can eliminate some of the noise and speak to it this way. And in fact, I'm going to do this again. All right, so I'm going to mark it up. I'm watching Snap right now. I just took a long on a reload on a breakout, and it just took off like a rocket. All right, so pivot, clear, right? It looks like a pivot, and it looks like a pivot. This is what? Early 2018. It had a roof and then busted through it. It held it as support, but not for long. And then we had the Christmas crash. So if I eliminate this action right here makes total sense. What are called these ABCs or three pushes, whatever you want to call them. Same with this one. Boop, boop, boop. These make sense. So this was an abomination. There's that word I was trying to spit out earlier. So 300 is a psychological level. And if the markets have a tizzy, it could fall into the clutches of that zone. I'm not saying it's going to 300. This is a pretty fast candle. These are weekly candles. So easy come, easy go. They didn't have a chance to consolidate it. They might want to revisit it, kind of like an open gap theory. Meanwhile, they're trying to, the range is tightening, and then at some point they're going to do this or that. So if I'm long and I see this to here, that doesn't change my mind. If I want to get long and I see this, I'm long. And if I see a breakout of these two levels here, I get long again. Not long again. I'd be excited to see it long. Definitely above that, you can see that this whole zone is a magnet, so it's congested. Once I get there, the momentum stalls. So I'm going to go back to a daily. 371 is a level to note. The one before it would be 366 and change. That's the last big fail. This is a big fail right here, 371. The biggest fail of them all is 386. Let's call it 387, 388, because it's right here, 388. So this is the October accident. So the S&P is already above or at its October accident. Thereabouts. So this is not too different from it. We're still battling with the October accident scene, the October ledge. We got back to it, and now onus is on the bulls to take it so they can use it as a floor. So these are my thoughts on Netflix. If I'm long, I'm not shaken out. And if it does fall into the $300 clutches, I'm not shaken out. In fact, it probably could be a trading opportunity. Now, this is barring any specific news from Netflix itself. So it's not my favorite of all the FANG. I think Facebook is, because it's got everything going against it and it's still trying to bust out. And I think it can bust out because they're an advertising monster. Most people don't realize it is until I spoke with somebody that actually uses it as an advertising venue, and he swears that he's never seen anything like it before. So Google should worry about it. But Netflix is definitely the momentum stock in there from the standpoint of it was the original bad boy that was rallying, kind of like a Tesla stock where it's frothy, where they're losing money and all of that, whereas Facebook actually is coining cash. So this is the difference between these two. We flipped on to back to Netflix. So again, the range is tightening. Something is going to happen. If I get shaken, if it falls into the 300 zone-ish, 310, 305, 320, I think it's a buying opportunity. If I own it, I'm not too worried about it. If I want to chase it, I would wait for those levels I noted earlier. All right, Nick signing out. If you have any questions, let me know.